So today I have with me for our tax update Jackie Meyer and Mike DeVolio, and I'm going to have them each introduce themselves to you a little bit, and they can tell you a little about their background.
All right. Hi, everyone. Welcome. My name is Jackie Meyer at Meyer Tax Consulting in Southlake, Texas, so very close by to the studio here. I own a concierge CPA practice of 5 staff. We work on tax strategies for high net wealth and executives.
Thank you, and thank you for having us today, Gail. It's great to be here. I'm Mike DeVolio. I'm a senior tax specialist with Intuit's ProConnect Group, and I've been with Intuit and Lacerte for 30 years. Prior to that, I was with Price Waterhouse in the Big 8 when it was the Big 8. Now it whittled down to the Big 4, and it's great to be here. Thank you for having us.
You're welcome. And I was with Deloitte Haskins & Sells when it was the Big 8.
Awesome.
So, yeah. So you all may have noticed that there are some tax law changes in the air. So with all of this that's going on right now, where should tax professionals start in the midst of all this change?
Yeah, so I feel like there's a lot of anxiety right now for tax pros out there, but I really encourage you to look more at the opportunities that are here for us today with tax planning and how our clients will be looking to us to guide them and be kind of that steady hand for them.
Okay. Mike, anything else?
Nothing to add there. I'm going to get more into the nuts and bolts of the tax law.
Okay, and there's lots of that.
Yeah, we're going to talk a lot more in depth, so I figured we'd start high level. Let's just calm down and go from there. Yeah.
All right, well, tax law is changing, and a lot of things are coming up. Let's start, though, with what we kind of know about, or almost know about, and that would be the extender legislation, which we have at the end of every year. So let's see where that is right now.
That's right. So for the extender legislation, several years ago with the PATH Act, Congress actually did a good job. They extended many provisions permanently or at least out of the 2-year window. However, there are about, 20 or so provisions that are still in flux. They lapsed at the end of 2016, and we don't know if they're going to be applying to tax year 2017 yet, and Congress has not acted on those. So for right now, items such as tuition and fees deductions, those have lapsed, and they will not apply to 2017 unless Congress does act on it, but we just don't know at this point.
And there hasn't been any talk. We don't know. It's a mystery. Is that right?
It seems as though Congress is focusing in on the budget, tax reform, and extenders, but they're not necessarily handling that one at the forefront.
Okay. Well, and Mother Nature has done a lot to help us with taxes this year. So where are we with tax relief for natural disasters?
The government has come to the rescue, and that's a good thing. What they did was they extended 2016 deadlines for businesses and individuals into January 31st, 2018. And those would be, the disasters would be hurricanes Harvey, Irma, and Maria, and also certain wildfires in California that happened earlier in the year to Northern California. So they extended those deadlines. Then there was also a bill that was put forth in Congress, and it was actually passed, a disaster relief effort, and it only applies to the 3 hurricanes, Harvey, Irma, and Maria. And what they did there was there's a number of measures, a few examples that they did. They loosened up the casualty loss rules, and they also made it easier for you to take out money from a retirement plan to help out with a disaster.
Yeah, I think one thing to add about the disaster relief is that it's not just for counties that were hit by these disasters, it's for the support counties as well. So for example, Dallas County, you actually can get relief as a support area. And so you may want to check your provisions for your counties as to, whether if the CPA firm's in a county that might be a support one to help your clients out.
Okay. And what else do we have in terms of changes for this year that we know about for 2017?
Yeah, so for tax year 17, it was a rather light year for tax law changes. One of the things that they did was, it actually carried over from last year, was the ACA provision where it was a little bit loose about whether you had to report whether or not you had coverage. What they're saying this year, though, is that on the front of the tax return, you need to indicate whether you had coverage or not, pay the penalty if you don't have coverage or an exemption, and if you do have exemptions, indicate that on the tax return. So that is going to be almost mandated to do, otherwise the return will not be electronically accepted by the government.
So it'll go through your software, but when it gets to the IRS, it's going to be shot back to you.
It would be rejected if you don't indicate whether you had coverage, an exemption, or pay the penalty.
Okay. Okay. And what else for 2017?
There was one other thing, again, it carried over from last year, but we want to reinforce it, and that is for earned income credit and the additional child tax credit, which is a refundable credit. Those items, those refunds are not going to be issued until February 15th at the earliest. And the government also accelerated due dates for W-2s and 1099s to January 31st. And that 15-day window gives the government extra time to look at those returns. As a result of that, we saw that fraud has actually come down by 47% year over year. So the government's taken a lot of good proactive measures.
Yeah, I mean, it puts a lot of pressure on us as tax pros. January tends to be probably a harder month than any other with, income tax filings. But, it's good to reduce the fraud, so we can't really complain there.
Mm-hmm. Excellent. All right, so that's the stuff we kind of know about. So now we can just speculate on what's going to happen next.
Right.
So we have a few topics that we thought we'd address in terms of where we think tax law is going. And one of the things that we wanted to talk about is a change in the economy, which is a big change affecting a lot of people, which is often referred to as the gig economy or self-employment 1099 workers, and what's on the horizon for them in terms of potential legislation that could affect them.
Yeah, just to tee it up front, with the gig economy, what we've noticed is that it's growing very rapidly. Businesses such as Airbnb and Lyft and Uber drivers, we're seeing that it's trending to or increasing 20% per year. Mm-hmm. So a lot more of these folks are coming online, and we call them self-employed, but under the IRS, they're considered small businesses, so they have to go ahead and pay SE tax, self-employment tax, and also make estimates. And that does create an opportunity for tax professionals to bring them in the office and do some planning and make sure they're compliant with the law and pay their estimates on time.
Yeah, I mean, it's honestly a hard industry to deal with because I think they tend to oversimplify their situation when it does draw them into a more complex self-employed business structure. And with the tax legislation changing, I think that it will be a little more complex for them if they're not just a W-2 earner, unfortunately.
Right. Yeah, I think that's kind of an understatement to say that it's
right?
confusing for them. I mean, every time I take an Uber or talk to anybody who's newly self-employed, they're pretty clueless about even the standard tax laws that have been around forever, just filing estimated taxes and being liable for SE tax and needing to keep records. I mean, it's just, I'm sure there's a program with all of these sort of franchised sort of startup companies that informs their participants on some basic tax laws, but maybe they're just not even looking at that material because it seems that people are being really surprised by what they're facing in terms of taxes.
Yeah, I mean, I think you could say that across the board for a lot of new business owners, but that industry in particular is not necessarily where they have a strong business background to even understand that side of things. There are some really cool apps out there that can help them get started, especially with mileage tracking. I think that's probably most important for that industry. There are some pretty neat ones that kind of automatically do it for you so that you don't have to think about it. So they should probably look into that.
Do we want to talk about those a little bit? When we did the app session a while back, MileIQ too was one of the #1 apps reported in
Yep.
terms of just our audience's favorite apps.
Yep, that's the one that comes to mind for me too.
I'm a little partial, but we have QuickBooks Self-Employed.
Yeah, that's a
Right.
good one too.
And we like that application. It does track the miles, and also it helps these small business self-employed owners organize their records. And then it also, additionally, they can transmit that information into the tax return, so giving them a head start on the tax end of things.
Right.
Yeah, I didn't really understand the whole point of QuickBooks Self-Employed until I actually heard Brad Smith, the CEO of Intuit, talk about it and talk about how it's really supposed to solve a very specific problem, which is separating business and personal expenses for people that don't understand it. And so that completely makes sense. I mean, they literally swipe left or right for what it is, and it really helps people that don't understand that side of things.
Well, and I think most small business entrepreneurs have commingled funds. They have
Oh, yeah.
a bank account and everything's in the same place. And it's not till they go back and look at the app or look at their bank statement online or wherever they go to see their transactions that they realize, oh, some of this is maybe tax related. I need to deal with that.
Yeah, definitely. And I'd hate to see them not get all the deductions that they can. So that's
Right.
another important point for us as advisors to take advantage of that and try to help them as much as we can. So.
Right. Okay. And those apps, MileIQ, QuickBooks Small or Self-Employment, Zero has Tax Touch. I think there are a couple others they're standalone, right? They don't need. They do hook into other bigger programs, but they don't need to, right? They can just be used on their own.
I'm not familiar with those, but
Yeah, they're standalone
Yeah.
products. And then there's also like TaxBot, which I recently started looking into. I really like their educational platform. They do a lot of really good videos to really simplify some of these technical concepts.
And that's really helpful, I think, especially putting tax information in layman's terms is really,
Oh, yeah.
it's a challenge and really necessary for especially entrepreneurs, small businesses. Okay, so another major topic that we have kind of a list of things we want to get through that is included here, actually machine learning and artificial intelligence. And what we're finding is that tax professionals are kind of on the verge of being, we think, pretty well disrupted by what machines can do. I mean, we've already had automated tax returns for a long time, but the process, I think in conjunction with the government that's supporting it, is becoming not exactly simplified, but the electronic part of it is being simplified. I guess I would say that the tax
Sure.
law is not being simplified.
Right.
right.
Yeah, that's true. Yeah, I think that's why it's really important for us to look at more higher level advanced strategy and consulting based services that we can provide to clients. My practice personally, we converted fully to value billing last year and focusing in on like return on investment we can find in advanced tax strategies for clients. And it's been very well received with our current client base and new clients. And I feel like we've got a leg up of, you know, some of this AI stuff that's going to come in and take out bookkeeping and basic accounting functions like that.
Yeah.
But, yeah, we're noticing that at Intuit, and we're tracking it as well. Those two items are definitely emerging, machine language and AI. And as an example, on the tax return and also on the book side, we're able to grab some of the data and automatically push it into the tax return, saving keystrokes and also improving accuracy. Another example is financial institution download. So if you see these 1099s and W-2s, the information is available in the cloud. And if we can automatically import that into the tax return, it's going to be keystroke savers. So on a grand scale, you see some of the more of the routine functions that accountants are doing, like key punch, that might be changing over to performing advisory services for their clients.
Okay. Excellent. I'd like to open up one of our polls right now. And if you go to, let me open it. If you go to slido.com, SLIDO.com, You can see our polling mechanism here. If it asks you for a login, the login is ES, as in Ensuring Success, 2017, ES2017 at Slido.com. And if you go there, our first polling question for this session, and that's not to be confused with questions that get you CPE credit, that's different. This is just polling for information and conversation's sake. Our first question is, have you been following the tax reform legislation very closely in the news? So we'd like to see what you think about that at Slido.com, and we'll leave that open for a little bit and get some responses. But I expect you guys have been following the tax legislation pretty closely in the news. And we can talk about machine learning more, but I kind of like to talk about
Get into the meat of
yeah,
things.
what's going on here with the
Yeah.
House and the Senate, and are they going to find a meeting of the minds, and where are our big controversy points?
Okay, yeah, well, we can do that. We can also talk a little bit about some tax planning considerations that people can do with their clients, which
Absolutely.
in kind of this unknown, vast unknown area that we're in right now. So yeah, this is quite an interesting day to be presenting on this topic because things are in such limbo. Do you want to kind of give an overview? I'm sure the audience already kind of knows what's going on with the House and Senate, but you've got a good feedback on it.
That's right. And the kind of the bottom line is nothing is final at this point. It's in flux. What we know is that a House bill did get passed last month or earlier in the month, and then a Senate bill got passed as well. So right now it's in conference committee, and they need to get together and hammer out a final bill, and then they need to get together and vote on it, and the president needs to sign it. So we're still in that limbo land. We don't know what the final outcome's going to look like, what it's going to look like, but we are tracking it, and we'll have the products up to date, and we'll put out some relevant information for our customers and prospects.
Yeah, I mean, I've heard that, you know, the Congress and the president do want something passed by the 22nd. Another date I've heard a lot of is the 8th, but, you know, you never know. The thing is that what we've gotten from this presidency is a lot of wild card situations. I honestly didn't think that we would get this far. I didn't pay any attention to the House bills. I paid a lot of attention once the Senate bill passed.
Right.
And so I kind of was trying to take a look at it like, well, what were the similarities between the two as to what maybe would truly come into law? But then, you know, got an interesting perspective from someone today that even if the House and Senate both match up exactly on one particular topic, that topic still could change. Like, for example, the C Corp rate. They both agree on the 20% right now, but they have to stick within like the 1.5 trillion budget.
Right.
And so if something else sneaks around a little bit, they might have to play around with that and push that up to stay in that budget. So we're really, you know, we're in 100% chance that what we know now is not what's exactly going to happen. And we have to try to just plan around that. So, but yeah, so where to start? How do we do like year-end tax planning? Do you want to talk about that?
Let's do that. Yeah.
Okay.
Yeah. What are the issues that are most likely to impact our clients in ways that we can help, even though we don't know what the final answer is going to look like?
Yeah, so in the grand scheme of things, people are saying accelerate deductions, defer income. So, you know, as accountants, we kind of understand that grand scale, but how do you look at it at a more granular level? One example that I've come across quite a bit is real estate taxes. You know, here in Texas, we're always playing around with tax planning and when the client should pay their real estate taxes between tax years. And normally, if a client's subject to AMT, I would tell them to defer their real estate taxes to offset that. But since they're going to have maybe potentially $10K or less of real estate tax deduction in the future, now I'm saying, as of this week, go ahead and accelerate all of your real estate tax deductions, and of course, state income tax deductions, and then, you know, hope for the AMT credit down the road to help you out with that.
Okay, now, because state and local it looks like will not survive.
Yeah, it does look like that, except for the fact that there's some talk this week of them loosening that up to maybe including state and local taxes as part of that 10K deduction. And that wasn't in either of the bills.
That's very interesting.
Yeah.
Now, you were saying last night that the 10K deduction, which I come from Indiana where property taxes are really low, so that sounds like an awful lot for someone to have that much property tax on their house. But I understand Texas, California, that's probably not that big a deal.
Oh, no. Most of my clients, especially being high net wealth, are greatly exceed 10K in real estate taxes. So, yeah.
Okay, so they would be, they would have that lopped off.
Yeah.
Yeah.
Definitely. Other than that, mortgage interest looks like it is still going to stick around. That's good news. There's a little bit of discrepancy between new mortgages if the cap would be $500K instead of the $1 million right now. But it was interesting. We found out about kind of the grandfathering provision. You want to talk about that a little bit with November 22nd?
Yeah, there's a question about whether when we move to this potentially new rule around the mortgages, it's like, what would an existing home be grandfathered in? And it's still unknown with the law, but you have to pay close attention to it. What are you going to do with existing mortgages, new mortgages, and then the effective date of the legislation? So it could be a little tricky. You might think, if you don't read the details, you might think, gee, at the beginning of next year, if I buy a home, then the new rules would apply. But they could still apply to an existing home. You just have to look at the details.
Yeah, it looks like in the really little details of the bills that there actually might be applying it from November 22nd forward from the House bill for anyone that purchased a home, when you would assume it would be 1, 1, and 4.
Right.
And so those are just things we'll have to kind of weigh, as they don't want people, what's the word, to game the system, right? And
because people never do that with
Oh, no, not me. No, that's my whole job is, massaging the system to the best legal advantage for my clients. So, yeah.
Avoidance is okay and evasion is not okay.
There you go, yeah. Just use one word, not the other, and you're okay. Yeah, charity is another one. Even though that one is continuing on, thank goodness, you may still be better off accelerating some of those charitable deductions if your tax bracket and effective tax rate end up being a lot higher this year than the future. And so those are things to just kind of play around with and look out for clients. AMT, I think the House wanted to get rid of it completely. The Senate was thinking about doing a higher threshold for AMT. So if people have like incentive stock options that they're exercising, things like that, I mean, it's something to consider, what's going to happen with their threshold in AMT next year.
So is it if you had to place money on that one, would you assume that there's going to be at least a revision to AMT so that the middle income taxpayers aren't necessarily hit by it anymore? Is that the expectation?
It's hard to guess. I mean, we have a House bill and a Senate bill. And like Jackie said, the House bill says we want to eliminate the corporate and individual AMT, yet the Senate bill says let's just bump up the exemption amounts. So we don't know where they're going to land. Will there be any type of relief? But that's all we have in front of us, unfortunately, at this time.
Okay.
We don't know what the final bill. They're not necessarily going to look at provision by provision and kind of meet in the middle on it. It's hard to predict.
Yeah.
All right. We're going to break just real briefly here to place a CPE code on the screen, and I believe this is the first one for this session, but yes, okay. So I'm starting to lose track.
Yeah.
Okay, so this is the first code of 3 that you're going to get for this session. It's a 3-digit code. It should appear on the bottom of your screen right now. If for any reason it's not appearing, contact us at info@ensuringsuccess.com, and we can figure out what's going on with that. But you should see it. Save that number if you're planning on getting either CPE or CE credit for this session. And we have poll results on our first question, which was, have you been following the tax reform legislation very closely in the news? And a pretty overwhelming 79% said yes, definitely.
That's good.
So yeah, that's good that people are paying attention to it. I think it impacts all of us, and of course, with it being timed here at the very end of the year, it is a really good opportunity for us to plan with our clients.
Yeah,
So
definitely.
I'm going to load up another question while you want to talk about what you've got next on your list in the new
Sure.
legislation?
So some other planning ideas for the end of this year, plug-in electric vehicles. They are looking to really get rid of that in the future. So if you have clients eyeing that, I would probably just go ahead and have them purchase those. The one thing that seems kind of up in the air right now is depreciable property. It seems like if you're purchasing new real property, it may be best to defer that to 2018 because it might accelerate depreciation quite a bit from 2018 new purchases and on. But if you're planning on selling a home, you may want to go ahead and do that this year instead of next year because they'll be changing that tax-free cap gains from 2 out of the last 5 years living in the property to I think it's 5 out of the 8 years is like the latest thing they've been talking about. So there's a lot of little opposites that you have to take into account there. Alimony payments, you want to talk about that one?
Yes, with alimony payments, I have to look at my.
Oh,
let me
that's
see
okay.
the sheet.
So yeah, it's I think it's good to.
In one of the bills, I noticed that they wanted to take away the alimony deduction for the person paying it, and then for the person receiving it, they wanted to exclude it being included in the income. One thing I noticed, though, it was the date of the divorce decree would be into 2018. So existing divorces, if they're done before that, assuming this provision holds up, and the effective date is after the beginning of the new year, then you'd be grandfathered in for existing divorces. But then if you were to get divorced in the new year, then they would take away potentially the deduction and the income from being included.
Okay, gotcha. Yeah, because something I saw was that you should, if you're on the paying end, you should go ahead and try to pay up. And if you're on the receiving end, you want to try to defer any divorce proceedings. So yeah, it's really interesting. Moving expenses would be repealed under both versions of the bill at the moment, except for members of the armed forces, so that's something to think about. And of course, all the 2% items and attorney fees, tax fees. I don't know why they targeted us as tax professionals, but okay. You want to prepay as much as you can there to try to take advantage of those deductions in 2017 because it's most likely they're not going to exist in 2018.
Okay.
Another thing, vehicles. I was about to get into this earlier. I'm still a little unsure where those stand. I had a client asking me the other day that, if they want to take advantage of the 25K Section 179 provision on an SUV or, over 6,000 pound vehicle, should they go ahead and buy it this year or should they wait? And although it looks like we'll be able to 100% expense a lot of assets next year, I'm not sure if that includes the Section 179 vehicle provisions. I don't think it does because they're talking about raising the bonus depreciation on vehicles, including some more luxury vehicles to it. So I think I'm going to advise him to go ahead and purchase the vehicle this year to go ahead and try to get that accelerated depreciation.
Sounds good.
What else?
On the 179 front, just to reiterate that rule, I think it's under the House plan. What they want to do is give a lot more generous expensing type deduction. So on the bonus depreciation front, it would jump up from the 50% to 100%, and then on the 179 front, it would go from being able to expense $500,000 up to the $5 million. So. And I think that's under the Senate plan. Again, we don't know what the final plan might look like, but that's what's currently passed under the House bill.
Okay. All right.
Now, I think one really important thing here is that people or the public expected these to be permanent changes to the law, and it's really looking like it's more of a 5-year plan at this point. And so things like them doubling up the estate exemption if that occurs, sure, we can try to plan over the next 5 years of it, phasing out or being higher, but then who knows, what president's going to come in next and completely change it. And so I still try to plan around there being an estate tax for my clients because I think that that's just going to ebb and flow over the years either way. But all these other provisions also are more of a 5-year thing. And so we have to keep that in consideration with the reform timeline, how it complicates things for business owners and the gig economy that we talked about. And how it's kind of making things more complex for anyone that's not just a W-2 with standard deductions instead of simplifying things.
Right, which I thought was, well, a few years ago that was the direction things looked like they were going in. Actually part of the Affordable Care Act, when it had the 1099 legislation in there, it looked like we were actually possibly going to move to a society where the tax returns would be calculated for us by the government, and we'd just get a notice saying, here's your tax. If you disagree, you can file a return. If you don't, you're done. And that got shot down pretty quickly. So.
Yeah, it sure did. You know, somebody out there saying that like 9 out of 10 taxpayers will have a simplified return. I don't see that in any of my clientele, but you know, obviously the simpler filers aren't necessarily using accountants as much.
Right.
But again, you know, you can focus on the opportunity that gives us to add a lot of value to what we provide to clients.
Absolutely. Yeah, and I think, you know, in most cases with accountants in practice, the clients that come in are the ones who have the more complicated returns and have a business or stock options or strange things that that require a lot of expertise, and so it makes sense that there's still going to be full employment for tax accountants.
Oh yeah, for sure. Yeah, we're not going anywhere.
The figure the IRS throws out is 60% of taxpayers see a practitioner versus doing it on their own.
Yeah, that's pretty interesting.
I wonder how that will change.
Yeah. So we have another poll question up, question about your plans if tax reform passes before the end of the year. So if you're still on your phones and looking at the Slido.com app, take a look at this and let us know if you plan to discuss tax implications with your clients before the end of the year, if the tax law actually does change now, or if you're going to, the alternative would be that you're going to wait until when you meet with them in the spring. So I think it's obviously a great opportunity for people to meet with their clients before the end of the year, and if nothing else, put their mind at rest. Once there's some legislation, explain what it means, and you can have more in-depth conversations when they've actually got their tax returns together. But
And it might not be one size fits all either. Maybe they're going to meet with their high-end clients or clients that are going to be impacted by the legislation, and they want to do some advanced planning and apply some of those tips that Jackie pointed out.
right.
Yeah, the one thing we haven't actually talked about, I mean, this gets pretty technical, but we've got a technical audience here, is, you know, how are business owners affected? And so, you know, the pass-through rates, they're talking, you know, the latest and greatest with the Senate side of things is they're talking about a 20% deduction against the pass-through income. But what a lot of people aren't realizing is that there's a 50% limit on the owner's wages against that. So let's say you have $500,000 of pass-through income, that would be a $100,000 20% deduction to have $400 pass-through, right? Well, but the owner only gets paid $100,000. So 50% of the 100 is that limit, and so you'd only get a $50K deduction.
Okay.
And how do you possibly like throw that together in your head? You know, I've already had to say that out loud like 5 times. So I don't know how, you know, anyone's going to do this without some good, you know, tax projection software.
Really good advice. And then you're in a situation, too, where you may have the owner who's got control over what his salary is, and so can totally manipulate that to get the best advantage.
Well, they didn't want people, again, manipulating the system because the more actual W-2 wages you have, the higher your personal tax rate's going to be, right? And so it's kind of the same thing that we do with, you know, S-corps and reasonable comp, and it's just adding another layer of fun to that. Yeah.
Did you notice in one of the prior bills, it didn't make its way through the final passage, but there was a provision where a Schedule C person would get taxed at a lower rate on the individual return, almost
you know,
in line with the...
I didn't see that, and I was curious, what is going on with the Schedule C'ers?
Yeah, I don't think they're going to get that more generous rate. from what I can tell. Now, something else might emerge, but I thought they wanted to do those folks a favor, but doesn't seem to be in the current plan.
Yeah.
Bummer.
And as much as we've talked about doing students a favor, it sounds like that's exactly the opposite that's happening this year.
That is true. In which regard? There's a lot of things
There is
going
a
on with
lot.
students.
Well, I'm
yeah.
thinking the tuition deduction is possibly going away.
Yeah.
And the credits as well, or not?
Yeah, the credits I believe
as
were going
well.
to be going away as well. The child tax.
Wait, with the education credit?
college
Well, they
education.
were going to consolidate the lifetime learning credit and the existing AOC, American Opportunity Credit, into a more generous American Opportunity Credit. And then the
okay,
tuition and
good.
fees deduction would go away, and student loan interest deduction would go away as
Right.
well.
And then I think it's the House bill has graduate fellowships taxed, whereas in the past they've not been. But I think the Senate did not include that, so it's pretty much up in the air.
Yeah, definitely. I think that they were trying to kind of raise up the child tax credit more, which is interesting because it's actually benefiting higher income taxpayers now anyways, which isn't really the point of it
Right.
whatsoever,
Yeah.
to kind of compensate for some of the other credits that might be taken away.
It's just hard to predict at this point. We have two bills that got passed, but we don't know what the final bill's going to look like.
Not even close.
They're going to get together and hammer out something different, and they may pass that and then get it signed. But these two bills, maybe it's a one speaking point, but we don't know what the ultimate bill might look like.
Right, right. With regard to our poll question, if tax reform is passed before year end and is effective in 2018, do you plan to discuss implications with any clients before year end? 85% yes.
I would think your clients would not be very happy with you if you chose not to discuss it with them because
Exactly.
they expect an update from us. And it's nice to kind of be the hot topic at hand, right?
Right.
I mean, normally people just completely steer clear of these things, so.
Right. So, and then if tax reform is passed, do you plan to discuss the implication with clients during the tax year 2017 engagement, January to April 15th? So I suspect that'll be pretty close to 100%. Unless you're not a tax person, in which case.
True.
So,
Yeah, it's good that they're being proactive. Because we did that poll elsewhere, and it looked like there were a large majority of practitioners who would meet during the 2017 engagement and talk about 2018. It's good that they're doing that advanced planning. Can we adjust the W-2 withholdings as well as the estimate, so they're not just going to put it off on the back burner and deal with it next summer
Right.
and do their clients a disservice.
Right. I mean, it's a great opportunity to spend more time with your clients and provide a lot more value. So why not?
Yeah, I think, you bring up a great point. I think anyone that has withholding through W-2 is definitely, that's going to be like the biggest thing at the beginning of 2018 is everyone kind of examining where their W-4 allowances stand and adjusting from there.
Right. Yeah, I expect there'll be quite a bit of that.
Yeah.
Yeah, I would think so. Just to put a cap on that, you're right, because although the government can adjust your W-2 withholding tables based on the new rates and such, but a big wild card is if the deductions change, itemized deductions change, then you really need to run that W-4, just like estimate routine, to find out what the right withholdings needs to be. Otherwise, you're going to be really blindsided.
Right.
Yeah. In fact, they might even enforce that 100% of W-4 participants have to refill it out because, like you said, it's all going to change. Every
Really
single
makes
allowance
sense.
type. Yeah. And that's not something that you even, wasn't even on my radar until today. So, yeah, a lot of stuff to think about. I think there's one other opportunity I wanted to mention. And earlier we were talking about AMT and how it may shift up on the individual side to hit kind of higher earners. Other than that, I think there's really a nice little pocket for people that are making between like 400K to 1 mil because the highest tax rate is pushing up from the 400 to the 1 mil potentially. And so you've got, what is that, a spread of, maybe 5 to 7% difference that those people are going to save in taxes on the top bracket, but then also with capital gains, because if they're no longer in the top bracket, they won't be subject to 20% capital gains tax.
Right.
And so that 5% spread between 15 and 20 could be a big difference for them as well. So I'm excited because that's where most of my clients are. And so there's a lot of really cool stuff I think we're going to be able to do there.
Nice.
Yeah.
Very nice.
Yeah, I mean, unfortunately, with how quickly they're pushing these things through, it leaves a lot of room for loopholes and a lot of room for people to come up with some cool strategies. So.
Right, right. You know, but that's often the case when a big tax bill goes through, that the loopholes come out after the fact, and then they scurry to correct them. So few people get to take advantage of them, but then as soon as people start taking advantage of them, then they're like, oh, wait.
Right.
We didn't mean to say that. So we need to post our second CPE question, or CPE code on the screen. So at the bottom of the screen, please record the second number that you see, the 3-digit number, if you plan to collect CPE or CE credit for this session. And we'll have one more code in just a few minutes. Okay, and our last poll question. Yes, 96% plan to discuss the new tax reform with their clients in the spring if it does pass.
Great.
So, and then we have one more poll question to do here. Just a general question. We're curious to know if tax reform does pass, do you trust yourself to educate yourself on this, or do you plan to attend some webinars or do some kind of additional training before you take it on and start trying to explain it to others?
And then the question is the timing too. Are they going to take these educational webinars as soon as they want them before April 15th? You're bogged down in all this work, but we need to get up to speed with this new law as well.
Absolutely, yeah. I would guess the answer to that would be yes too. And it looks like a lot of these people are coming in with yes or maybe.
To contrast this with the Affordable Care Act that was passed back in, or took effect back in 2014. Back then, what we noticed at Intuit was a lot of practitioners were kind of blindsided by it. They were thinking, oh, that's a healthcare law, and it's not going to affect me. But they channeled a lot of those provisions through the tax code and the tax return, the penalty, the exemptions, and the credit. And so they were really, the folks were blindsided as late as into the fall. So we were having to get them up to speed. It seems like with this law, since it's tax law versus healthcare, they are more up to speed with it. And it kind of makes sense that way.
Well, I think it does make sense. I mean, this is all convoluted and may not make sense on a logical level, but I think in terms of understanding tax legislation, I mean, this is being written to an audience who gets that. So that makes sense. Whereas ACA was just, kind of blindsided everybody. It's like, oh, it's you guys, tax accountants, get to legislate this too, or oversee this.
And I think there was a lot of denial, like even after the fact, like even after the fall of that year, of like, really, are we really now everybody's healthcare advocate and have to track this for everybody? What is up with that? It was very strange.
So, we're seeing 79% say that, yes, they probably will attend educational webinars before April 15th, and another 17% maybe. So, looks like we're going to be in a situation where, lots of educators can be providing good tools for these accountants.
Yeah, definitely. I'm a member of the AICTC Certified Tax Coaches, and I know Dominique was frantically working on like updated releases for us to send out to our clients this week. And I really appreciate being a part of a group that does that, because it's so much less stress and weight on my shoulders to know that I have peers I can rely on, that, we can bounce ideas off each other.
Right.
It's important.
So we have one more tax code, CPE code to display on the screen. So let's go ahead and display that, the third code for this session. So be sure to record this with the other two that you've already gotten. And then I think we should have a little discussion about security and identity theft, because I don't think there's a tax accountant out there who doesn't have clients who've been affected by this in the past 5 years or so. So although I understand that it seems to be waning a little bit, the ID theft part of it anyway, or not.
They're going after accountants more than they are the actual clients.
Yeah.
So that's where it's maybe lightening up on that end. But then we have to try to protect our PTINs, which no one's doing for us quite yet. But I know the IRS and Intuit and have been good advocates for us in that. So
Yeah, we've seen and the IRS issued the statistics, the refund fraud and the criminality. The numbers have been dropping quite a bit over the last couple of years, and I give the IRS and the industry a lot of credit. They put together a security summit several years ago, and they banged their heads together, the state agencies, the federal agency, and the tax practitioners and software developers, and they tried to come up with ways in tightening the system. They increased their fraud filters. They limited the number of bank accounts that the refunds can go into, limited it to 3. So those measures, and the one we spoke about before about the refunds being issued for EIC and advanced child tax credit, not before February 15th. So we've seen the fraud numbers come way down, and that's good. A lot of good progress. At the same time, there's a lot of challenges out there, so we still have to stay pretty vigilant. As Jackie said, the cyber criminals are now going after the practitioners. They realize that they hold a treasure trove of personal identification information within their office. So you have to make sure that you follow a really good security plan. You have to make sure you dispose of and destroy documents outside maybe the 6-year window. You have to make sure that you incorporate strong passwords on all your systems just to shore up your system.
Yeah, I mean, and they're not going, small firms may say, oh, well, they're not after the little guy, they'll go after the big companies, but that's not true at all. They'll actually target the little guys because they know we have less security measures than the bigger guys would. So we have to be really careful. I personally know several very small firms that were targeted by ransomware. And if you don't know what ransomware is, please Google it, because they will lock up all of your files and make you pay to return them. And some of the backup systems out there and online don't necessarily back up as much as you think they might do. So every firm wants to kind of double check what their policies are there. And of course, with remote workers, you need to be careful as well. I believe that we're required to now have like a remote worker policy to release, like TaxSpeaker.com. They have one that you can use as a template or whatever for smaller firms. So it's good to do that kind of thing.
All right, so we're going to have a really quick session here because I've got a bunch of questions. So let me just throw these out to you really quickly.
Great.
Any tax changes to carried interest yet?
Not to my knowledge on the carried interest.
I'm going to have to dip into my document here because there are some provisions about carried interest, and if I can get to them quickly here. And I have the House version in front of me, and let's see.
I know there was a lot of debate with passive versus non-passive pass-through and how people are going to get the deductions, and it did include a lot of limited partnership interests and that kind of thing to where it might benefit them.
Here's one provision on the House side. Every business would be disallowed a deduction of interest expense in excess of 30% of the business's adjusted taxable income at the entity level. And then businesses with average gross receipts of $25 million or less would be exempt from the limitation. Okay. So it looks like they do want to put a cap on it to some extent. Again, that's the House, and nothing is final yet.
Okay. I just lost it. Where was that? The pass-through, would that be above the line?
Yes, to my understanding, yes.
Okay.
But I don't know. That's a great question. I don't know. They haven't given us that level of detail.
Okay. The real estate tax deduction limit of $10,000 applies to itemized deductions, right? Is there any talk of reducing the deduction for businesses?
Reducing what deduction for businesses?
Real estate tax?
There are some limitations on business deductions and credits. I don't believe that was one of them. I can go through the, let's see, I think it was more to do with the interest that we spoke about and the and on the credit side. So I don't see a provision on that to reduce it or limit it.
Okay.
There was like a Snopes article, what is it, Snoops or whatever? Snope?
Yeah.
Okay. I just saw the other day about people were freaking out because they thought that all these business deductions were going to go away. And there's really not any basis to that.
Okay.
So that's good news.
Good.
Yeah.
Okay, several people wrote into our Slido site saying that they were having trouble getting through on the info@ensuringsuccess.com email address. We are addressing that, and apparently it is either fixed or about to be fixed. So feel free to keep trying. And if there were a couple questions about CPE codes coming in on Slido. Some people were confused about which codes were which, and you're coming in anonymously on Slido, so I can't answer those questions. So you have to get through on info@ensuringsuccess.com. And if you can't get through on that, just email me, CPAPracticeAdvisor.com, and we'll figure that out. So with that, I think we're finished with tax update session. Thank you both so much.
Thank you.
For lots of great information. We hope, that the government figures it out pretty soon. So, yeah.
Thanks so much for having us, and
Oh, my
invite us back
pleasure.
if you'd like.
Absolutely.
Thank you.
Thank you all. We will be back at the top of the hour with our next to last session, which is on hiring the right people for your accounting practice. So we will see you then.